We're officially halfway through the earnings season, and we're looking at ONEO, Yum Brands, and Humana in today's earnings exchange. So here with our trades is CNBC contributor Gina Sanchez. She's Lido Advisors chief market strategist. So first up, we got to go ONEO. The nat gas provider is 16% off its May lows, but gave up some big early October gains. It recently completed its acquisition of Magellan Midstream Partners, which Mizuho says will provide synergies and key free cash flow, especially as natural gas prices remain relatively lower for longer. Gina, you'd buy into the print here or no?
No, we actually own this, and so I'm gonna say that this is a buy for us. This is, something that this is a company that has managed to navigate weak natural gas prices and still grow its EBITDA. Its EBITDA has been very strong, and the acquisition of Magellan is expected to contribute to that. More importantly, they've actually continued to grow that EBITDA through exploration and so E&P spending. And as they've done that, Magellan should actually help regenerate more free cash flow. So all of that adds up to a very good outlook for the company.
All right, Gina says buy on ONEO. Next up, we got Yum Brands. Those shares seeing a bit of relief after a more than 12% slide since July. Stifel analysts are writing that the fast food demand is showing signs of slowing there, but noting that Yum's scale and lower debt risk makes it well positioned amongst its competitors in quick service restaurants. Yum Brands, Taco Bell, KFC, and others. Buy or sell?
So we like this one as well. We own this. And quite frankly, look, when the going gets tough, the tough eat cheap. And that is what Yum Brands represents. And if you look at sort of what has happened, yes, there is definitely some weakening in consumer demand. However, Yum Brands are rolling out new products. Pizza Hut is has rolled out Melts. And they've also launched some value packages at Taco Bell, which have actually been growing their same-store sales. And despite everything that's happened over the last couple of years, they've managed to maintain an impressive operating margin, 33%. That says something about the management of the overall company. And we think that that's going to be kind of a big and important, good point for the company.
All right, so that's two buys now, Yum Brands and ONEO. And finally, we're going to key on Humana, clawing back those steep June losses. Analysts at Mizuho noting that utilization seems elevated, but it's unclear if there's pent-up demand or this is a new normal overall. They say that consumer downturn and competition in Medicare Advantage pose the largest downside risk for the insurer. Gina, you don't maybe share some of those same concerns, especially when it comes to that so-called Medicare Part C.
Well, look, that's actually been a big component of their growth. And so I can see how you might be concerned that this could slow down, but this is something that would affect all of the insurers at the same time. This is a company that has also managed to buy back stock and grow its EBITDA that way. So, we actually see this as a company that has done well despite an entire sector that is getting beat up. And quite frankly, it's reasonably cheap relative to, where it could go. So we still are holding on to this stock. We think it still has some room to run.
All right, so positive on Humana, Yum, and ONEO. Gina, one last thing before we let you go. Is this a market right now with the current price and trading action that makes you feel a little bit more uncomfortable or more settled in?
Look, we think that there's a lot of unpriced risk in this market. So, if you look at the risks across the board, you just aren't seeing them. Most economists have thrown in the towel on their recession bets and are just basically pricing in a slowdown. But that slowdown is probably still coming. So we think that you probably need to remain defensive. And despite that sort of general assumption that we're going to remain defensive, we actually think that there's some downside risk to that.